Welcome to MDC, which is Management Decision and Control. This is paper 10, and it is on the syllabus of the Institute of Certified Public Accountants of Uganda. This paper 10 is it basically builds up onto the knowledge of two papers, that is quantitative techniques as well as cost management accounting. The paper is aimed at imparting you with knowledge to help you be an financial analyst, but you're not just analyzing the financial data, but you're also analyzing the non-informational financial information. I usually tell people that management decision and control, of course, some people may call it management accounting, but helps you to be able to help management make key decisions, especially based on the information that you provide to them. So as accountants, mostly what we are very conversant with are the financial statements. But this is not the same thing for the managers. The managers may not understand the terms of financial statements, may not understand things like maybe provisions for bad debts, depreciation, maybe cost of goods sold. Those terms, although look to be simpler, they don't seem to be easy to comprehend, especially when it comes to people who have not studied financial accounting. So it's important that as somebody who is an accountant, you are able to help out these managers on certain kind of aspects. So this paper is, of course, examined like as a CPA paper, and usually it is trying to test you how you're able to interpret, analyze, evaluate, and apply knowledge and skills to real life situation. As we shall see how some of the questions are structured, especially for this paper. So of course, like any other paper on the CPA course, this course is actually this paper is a 3 hours examination, which is made up of two sections, that is section A and section B. So section A comprises of one question and usually a case study question, while section B will comprise of 4 questions, which are 20 marks each. So here the candidate is required to attempt any 3. So in total, of course, you're aiming at 100 marks overall, but of course, depending on how you approach the questions and depending on your level of knowledge and how you comprehend everything in the exam will determine your final mark, but you're basically working out of 100%. So this paper has a very detailed syllabus, and as you will get to learn how different topics are broken down. I usually advise CPA students that every time you, let's say, for example, you're studying a paper like this one, ensure that every time you're either studying a given topic, you're cross-referencing whatever you're studying, especially with what is on the syllabus. So as you can see, the syllabus is well structured, and it has the various topics. As we can see, it usually starts with the management information and communication. Now, given the fact that this is a professional paper, I usually tell my students that it's very important for you to know why some of these topics are actually part of the paper that you're studying. How does it link into the knowledge that you're going to be able to get out of the paper that you're doing, but how are you able to apply it even on the other side? So management information and communication is one of the topics. And this management information and communication, why it's important for this paper specifically, which is management decision and control, is because before you give information, you as an accountant who is giving management information to help it make decisions, before you understand what exactly they need. You yourself need to understand this. And that is why here we are going to be able to understand what is the meaning and the different sources of or attributes of information. We are also going to understand how do we communicate this information to managers. And then we shall also understand what is the value of our information, because once we communicating, we are communicating value to managers, because the kind of decisions that they are making out of whatever information we are providing is of value to the organization. So it's very important for us also to appreciate how does management value the information that we provide to them. So that is quite important for us. So that is our first topic, and we have notes for this first topic. And we've also done a full session, a full recorded session on this topic, which is introduction, which is our topic 1. So I would encourage you to be able to look at that. But this is just to give you an insight onto the topic and what you should be able to know as well. Of course, it also cascades down to aspects of measurement theory, which you'll be able to appreciate even as we move forward. So very next to this is what you may call the nature and role of management accounting. Now, remember, the paper we are doing is management decision and control. So you'd ask yourself, why the management accounting coming into picture? Earlier on, when I was starting, I said that this paper builds onto our knowledge of cost and management accounting, as well as quantitative techniques. But the overall intention of management decision and control is that of a management accounting, which is basically trying to transform the financial information, those audited books of accounts, the financial statements, the income statement, the cash flow statement, the statement of changes in equity, being able to transform it in information that the other manager, the other side, who is a human resource manager, who is a marketing manager, who totally does not have financial background, to be able to comprehend them, to support them make decisions, to say, if our revenue is maybe 100,000, how does that affect the HR manager? What they have to know, especially when it comes to aspects of staffing, because if you're dealing in a business that is driven by, let's say, sales representatives, does the number of sales representatives affect the revenue on the other side? So the management accountants get those financial reports and sit down and start making narratives to help management understand how is the business going, but also to help it make decisions. Some of these reports, and as we shall proceed to understand, especially when they try to compare management accounting with financial accounting, you'll understand that the management accounting reports are tailored reports and they don't have a standard format. Why? Because every organization will have its own format. But then in the same way, sometimes the managers have different needs. Why? Because they have different decisions they want to make. The requirements by a marketing manager may not be the same requirements for human resource manager. Why? Because these two are totally interested in different things. So it's quite important for you to appreciate that. And then, of course, the role of management accounting is also one of the things that we shall try to appreciate. We shall try to appreciate how does the management accountant come into aspects of planning. And by planning here, especially when we're speaking about the management accountant, we're speaking about budgeting, because budgeting is one of those key areas that most of us come to usually appreciate, especially as accountants. So the management accountant actually goes on to help us be able to appreciate some of these different aspects. So planning, how the management accountant comes into the process of organizing, how do they help in decision making, how do they also help in motivation, because motivation is one of the roles of management. So how does the management accountant facilitate that process? They provide information to management so that this information can be shared with the staff. For example, if it's a sales team, if a sales team is able to know how much they have been able to hit off their targets, it's a motivating factor. So we'll be able to understand all those aspects, the behavioral, the organizational, the social aspects of management accounting. The ethical responsibilities of management accountants also come into play. Why? Because this is a professional paper, and it is not just giving you insights to understand the different areas of, let's say, the course, but it's also preparing you to be a professional accountant who is ethical, who is able to hold the high principles of the profession. So the ethical responsibilities, these are some of these you might have already interfaced them, maybe in financial accounting, but the objectivity, the honesty, basically professional indemnity, and all those aspects that help the business to be able to trust the information that they're getting from you, because you're an accountant, you're ethically responsible to be able to know that the information I'm providing is information that is going to help management. It's not biased information, it's objective information, among other aspects. So that is quite important for us there. And then, of course, the other topic is, of course, the relevant costs and revenues for decision making. So as you get into this course or paper, you get to appreciate that not every cost is relevant, or not every revenue is relevant. And the relevance aspect is coming into play in the area of decision making. Like, not every cost you incur is actually going to be relevant to your decision making. I don't know if you get the principle. And even right here, we usually so much relate it when we are doing the full topic, which you also have a recorded video for it. You get to appreciate that relevant costs are those costs that if you incur them, then they'll affect basically they will affect a decision that you're making. I'll give you an example. If you're on the CPA program, and maybe you're now choosing to do an MBA, and you're saying maybe I cannot really proceed much with CPA, so I need to do an MBA. If you're trying to evaluate these two things, you're evaluating the CPA program and you're evaluating the MBA program, you find yourself that there are already costs that you incurred along the CPA journey that are you can no longer regain. Maybe you have sunk costs. Maybe you already did 2 papers earlier on, and you now want to be able to revamp, or you want to do the MBA. So any cost that you've incurred previously is a sunk cost that you will not be able to consider. And even in business as well, if a business is considering between 2 products and saying, for example, we're dealing in Melinda and maybe Pepsi Cola, and we would like to know which product should we prioritize most, or maybe stop production. There are costs that we already incurred on this Pepsi and Mirinda that are no longer going to influence our decisions, because either we take the decision or not, we already incurred these costs. So that is one of the areas that you will be able to appreciate when it comes to relevant costs and so on. We shall also come to appreciate that, in accounting, we have what we call notional costs. Basically, they are costs that we do recognize, but there's no cash movement. Things like provision for bad debts. There's ideally no actual exchange of cash, but we are recognizing bad debts as an expense. Depreciation itself, we have also recognizing depreciation, debiting depreciation, crediting accumulated depreciation. And in reality, this is an expense that we recognize. But when we are making decisions in management accounting, and we are trying to help management make decisions, some of these costs are excluded. Why? Because they're notional accounting costs. They're just coming through because of accounting, but they are not going to influence in terms of the decision that is to be made. So we'll be able to appreciate that, and I also encourage you to be able to, as you progress through the videos that we do provide to you, this would also be very important, a very important topic to actually look at. Now, there are some of you that are just, maybe you're just starting out, and maybe you've not yet gotten access to some of these videos. I would encourage you to be able to reach out so that you can be able to access some of these videos, and then also to be able to provide you with more details, especially for those that are preparing for the CPA exam. So it's quite important This is just to give you an overview, but then for the detailed topics, you need to be able to acquaint yourself now in the various videos. We also go ahead to also get down into aspects of revision, where we get a topic and now look at some of the past papers to see how each of these topics is examined. If you realize, when I was starting this course unit, I say that this paper specifically, the way it is examined by a first question, which is section A, which carries 40 marks. And this is usually a detail. Of course, it's a long case study that you need to be able to appreciate. Now, if it's a long case study that you basically need to appreciate, it's also very important for you to know that if I'm attempting, let's say such a paper, okay, I'll just try to display one of it. Here, this paper was called paper 11, but it transformed into now paper 10. But typically the same kind of content. There's nothing that much changed. So in the same way, this question is 40 marks. So this is the 40 marks they're talking about, as you'll see when you try to scroll down. So you can see these are 40 marks. And these 40 marks, when you look at them, these various topics that are embedded within what we shall study. And the examiner usually has, they usually combine different topics, because they know by the time you're going for the exam, you have typically gone all through the different topics. So you can be able to answer. For example, this one was asking to do with the maximizing profit. So there was a question, there's something to do with linear programming here. Then you're also advising the board on different cash budget. So there's also some budgeting and reporting here. Then AB system, and ABM, which relate to inventory. And now they're asking about cost plus pricing, which is the pricing topic, and so on. So you'll be able to see how each of these questions come into play. It's very important for you to start a little early when it comes to aspects of questions. Like every topic you get done with, yours is to interest yourself and ask, how is this topic examined? And how can I be able to answer any questions that are set in relation to this topic? So we are going through these topics to help you understand them as you go through the videos, which are accessible. And of course, the reason why we also embed videos within our study is because we want to make sure that we are leveraging on time. We want to ensure that the time we have now to the exam is enough for us to be able to do the actual studying, but then also do the revision. So instead of us coming here often to do the normal classes, what I usually do to my students, I give you the video, you go through the video, and then once we meet, we are now trying out with, let's say, past paper question, where you're able to build your confidence around. And then you also have an opportunity to be able to ask questions that might come up, especially in your study. So that's important. And then, of course, I was on this relevant cost making, relevant cost and revenue for decision making. So we'll be able to look at the relevant and irrelevant costs, which I was trying to hint about, and also look at what factors do we determine in making relevant costs. Okay, this is important. And then the importance of qualitative factors in decision making. One of the things that we said when we're starting this paper is that the importance of it is that accountants are going to provide management with both financial and non-financial. So when it comes to decision making, these two things are important. Why they're important is because if today you're dealing into maybe cake making, and you get a new order, maybe your cakes are sold at 200,000. That's your standard cake, maybe for a birthday. And you have this client who wants to give maybe birthday cakes to their employees. So they want 10 cakes. But instead of paying you 200, they want to pay 150, or they want to pay 100,000. So you're going to make a decision. And one of the things actually that we study within relevant costs and revenues for decision making are what we call the short decision making criteria, what we base on to make those short-term decisions, like orders, special orders. So when you're attending that special order, you're not just going to look at the money and say 10 times 150, that is good money for me, maybe 1.5. And if my cakes are 200,000, am I able to still make a profit? So you're going to do the financial computations, look at the cakes and see, why are you charging 200,000? Are you able to still make a profit on 150? And then you going down to also look at, do you already have less existing customers? And if you take on this order, does you accepting this order affect your already existing customers? Are you going to have any delays in meeting orders for your existing customers? Because this is a person who has brought in 10 order cakes, and then you already have your normal customers that you keep serving. So now we are now getting into the qualitative aspects. We've left the financial, which you are saying 150, I still make a profit. But then we're getting now in the qualitative. What next after we take on this order? What are some of the other areas? The other could be another qualitative information could be that if I serve this client, maybe it's NSSF who is asking me to give them cakes, 10 cakes at 150. They're going to help me enter into the public sector market or the corporate sector market. Now I'm going to start supplying cakes to organizations instead of now waiting for individual people to come and buy. Now you're getting into aspects of qualitative. And that is why we are saying we are going to understand, how does the qualitative factors come into decision making? What exactly that brings? So quite important. And of course, we also appreciate what you may call the decision making process. What is the decision making model? What do we base on? How are you able to come to a conclusion and say, I'm choosing this? Okay. Of course, you'll be able to understand aspects of it all starts with understanding the problem or the opportunity at hand, and then being able to make research on alternative options that are going to help you on to be able to solve the problem or to be able to tap into the opportunity. You know, when we are looking at decision making here, most of the times it's not a problem as it could be. It could be an opportunity. It could be an opportunity to enter a new market. It could be a problem where you have an outdated machine that you need to dispose of. So that's a problem. So you'll be able to appreciate the varying aspects that come with either it's a problem or an opportunity. So that's the decision-making process. And then, of course, after you've made research on each of the different areas of less actions, then you're now able to make what you may call an informed decision and choose the best option based on your research. And then, of course, after you've made the research, there'll be aspects of monitoring and evaluation to ensure that whatever decision you took is actually giving you the desired result. So all those aspects, you'll be able to learn them when it comes to decision making. Okay. And then decision making as a planning and control process. Then we shall also look at the relevant costs of material and labor. So in the same way, when we are making decisions like take on a new order, shut down an operation, or we are maybe hiring a new skilled staff and we need to make key decisions, we also need to be able to understand that what are the relevant cost of materials, okay? Because sometimes I'll give you an example, like for materials, there are times when you have already available materials that you do not going to use for anything else. So the question would be, is that a relevant cost? And when somebody says, is that a relevant cost? What they are basically saying, does that influence your decision? Okay. I'll give you an example. If today you were working on, let's say, maybe a factory, oh, let's me just say paper business, paper, maybe a stationery. And you have these papers that you have photocopied and either they photocopied wrongly. So it's waste paper that you have. And so you get a deal, or where these are papers that you're just going to destroy, either throw away and so on. So you get a deal of somebody coming, and either they want to give you money into those kind of papers, or somebody comes with an order, but for something totally different. Maybe they want you to make certain crafts, and you're going to utilize these papers. So the question will be, will the value of these papers come into play? Is it a relevant cost? Or because these were already scrap papers, the cost of them is not going to be relevant in the decision making, because they already scrap. Even if you either you take on the contract or not take on the contract, these are things you're going to throw away. So there is no relevance into the cost. So you'll be able to understand the dynamics, especially when the examiner is setting questions around these areas. The student, you should be acquainted with knowledge to be able to tell that this is relevant, this is irrelevant. Okay, because they'll give you a case study and will give you different costs, and they'll advise management on what decision to make, and you'll be able now to break down and say, this is relevant information. Even if we make the decision or not, it will not be affected. Okay, so we'll be able to appreciate that as well. And then CVP, which is a very common topic. So here we shall be able to understand. I think you might have heard about break-even points. And in business, when you are saying break-even points, it is that point in time where the business is neither making a profit or making a loss. So you're basically at that point in time, because we understand that if a new product is introduced to the market, in most cases, we start with making costs, because that time customers have not started buying. So you as a business, you keep on incurring costs. And at time B, you now start seeing customers coming through. So as the customers come through, the costs also continue to come, because you continually still serving these customers. But there is a point in time where your revenue, how much you're making from the customers, is going to meet with how much you're spending. So the total costs are going to now match your total revenue, which is going to be your break-even point in time, which means that beyond that point, your business is going to start making profits. You're now going to get into a profitable position. So what helps us with representing that is the CVP model. And we shall be able to understand that there are two models. There is an economist model, which is curved in nature. You know, when we are looking at economics, there are different aspects that come into play. And then we shall look at the accountant's model, which is straight line, which is able to show the revenue line starting from zero and growing, which is able to show the costs, how the costs also behave. And then it will be able to now show us how is the break-even point is, and all that. So that's a very interesting topic. And that is why even it's a common topic that you need to really watch out in the exam. Of course, all topics are common because when it comes to these papers, you do not just want to spot. There's nothing like spotting. You need to be able to acquaint yourself to all these topics, okay? So we have what you may call the costing systems, which I shall also be looking at. Now, you will appreciate that in business, cost is a very important factor. If you're dealing, let's say, in a beverage company, where you're incurring costs on water, which are your utilities, you're incurring on electricity as well as part of utilities, you incurring on raw materials, branding, and so on. All those aspects affect, they're basically cost elements. You're incurring costs on each of them. And that means that since you're incurring costs on them, they're going to influence your pricing. Okay? They're going to influence your pricing. And the pricing means that at the end of the day, you need to have a competitive price in the market, okay? So how you determine your costs is also important in how your pricing will be determined, but that will also feed into your profitability. So the costing systems help us understand, how do we determine cost? How am I able to distribute that electricity bill that I've received into my unit of a bottle of, let's say, water or soda that I'm selling? How is that cost linked? How am I able to say that I'm selling this soda at 1,000, but the cost of electricity of the store where this soda is kept is actually embedded within the price of that soda? So there are different costing systems, and one of them, which is most common, is the activity-based costing. And this basically looks at costs in terms of activities. So it believes that activities are the cost drivers. Like every activity you do, like let's say storage, it drives the costs. So we're able to look at it from the perspective of activities, and you'll be able to appreciate and see how this fits into. But in the same way, of course, you're also able to appreciate on where did ABC evolve from. And before ABC, what did we have? Because we had what we call the traditional costing method, which was mostly allocating costs based on, let's say, man hours or machine hours, or man hours, or you can call it labor hours. So this was not totally an appropriate way of allocating costs. Why? Because there are different ways of how some of these costs work. So we'll be able to appreciate that as well. Quite a number of topics, and in the videos for each of the topics, I go through these topics in a detailed way. And then we also have different revision questions that are around some of these topics. As you can see, apart from ABC, we have target costing, where, for example, you know that if you're entering the drink industry, the bottle of water now, most of bottles sell at 500. And if it means that the market price is 500, so the business comes up with a target cost and say, we want to make a margin of 200 on every bottle. So we have to let's say we have to have our costs not go beyond 300 if we are to sell this bottle at 500. So we look at how do businesses go through the process of target costing as well. And then the other is the aspect of pricing decisions and profitability analysis. Now, pricing is an important aspect, okay? And at least every business, either you're selling a service or you're selling a product, you have a price. But the question is, how do people determine these prices? Why is Coca-Cola selling at 1,000, and why do they sell another bottle at 4,500? How does that all come into picture? Now, this is where we shall be able to understand the different pricing strategies. When you're entering the market, are you entering with penetration pricing? Are you entering with price skimming? How does that link into your decisions as a business? Then we shall understand transfer pricing. Transfer pricing is mostly with businesses that work in terms of divisions. For example, I usually use an example of Spear Motors. Spear Motors has the Benz selling section, but then they also have the mechanics where they repair the vehicles. So yours is to understand if the vehicle's repair is charging because if one of the vehicles that they are selling in the Benz side gets a mechanical problem before it is sold to the customer, this repair side comes and repairs. What price do they charge? Okay, we'll understand where this transfer pricing comes from and why is it helpful for us to have these internal prices, where you know that one of the entities, let's say maybe it's in a bottling company, one of the entities says, I'm pricing maybe my water at 1,000. but at production, that water comes out at, let's say, 700. So 700, then the sales team picks up that water and charges 1,000. So the production team is basically selling at 700, and then the other team is selling at 1,000. So be able to understand the dynamics of that. And then risk and uncertainty also comes into play here. Remember, the paper we are studying is decision making and control. So we want to understand, how do we make decisions in aspects of risk and uncertainty? I know COVID taught us a lot, and businesses work in uncertainty. We can't tell what tomorrow might hold. So it's quite important for us to understand the different methods that we can use to make decision-making in uncertainty. And you're able to appreciate decision tree analysis. If you did quantitative techniques, this comes so much into play. We'll be able to understand, again, bring in the CVP analysis here in decision-making as well. So quite different topics, management control systems, basically to understand how do we control the organization. Why this is important is, management wants to have everything in control. If they budget today and say they want to make $10 million in a year, they want to ensure that they have some level of control. So we'll be able to understand the different control techniques. It's like driving a car and you're moving from Masaka to Kampala. How do you ensure that you actually reach Masaka? So as accountants, management accountants, we help management with this different information. Like budget analysis, budget versus actual analysis, to ensure that they understand the journey they are on. Okay? So that's important with management control systems. Again, we'll be able to understand aspects of budgeting and budgeting control. What exactly happens with the budgeting and budget control? Here we'll be able to understand, of course, budgeting is very common into the public sector, but many private sector organizations have also appreciated budgeting. Not letting costs just arise from anywhere, but there's an element of ensuring that they prepare a budget at the start of the financial year, a budget over which they can be able to evaluate themselves to see what exactly they have achieved. So we shall look at how does the budgeting process take. Government has a budgeting manual, and some organizations also have appreciated the same, and they have what we call a budgeting manual. They have a budgeting period. When does the budgeting period start, and how does it go? You learn things about zero-based budgeting methods, and so on, which are usually under what you may call, some people call them approaches. Okay, so we'll be able to appreciate those, quite a number, to see how they really play out. Okay. And then the other topics is linear programming, okay, which some of you did at when you're doing quantitative techniques, but we shall go through again this. Then we have another topic here on inventory planning. Inventory is a big factor in organization, especially those that are into production, but even trading organizations that buy and sell, inventory is also very key. So we look at the different inventory modules, okay? Then there is cost estimation methods. We already said that cost is an important aspect when it comes to businesses. So one of the other topics we look at is the cost estimation, to see how are businesses able to estimate costs, okay? And then the regression analysis, which is also a very common topic for those that attempted quantitative techniques. So quite a number, many aspects that we shall look at as we proceed. And I want to say that we at least have a recording for each of these topics already there. So as a student, this helps you in a way that you're able to start going through these videos, and they are quite helpful for you to know that by the time you're just maybe 1 month towards the exam, you've at least gone through all the topics, and all you're doing actually is now revision. Okay, it is revision, and to ensure that you're perfecting and understanding. Like I said, this paper is best passed by one thing: revision. Why? Because when you look at the text that we study, the examiner is not just going to pick something and ask you. Yes, there's an element of theory where the examiner will ask you, give us some maybe recent post strategic management methodologies, or tell us about the ABC method or ABM process. But when it comes to most of the things, the examiner will set for you questions which are a bit detailed, okay, which are case studies and so on. So when you look at some of these past papers, they help you to be able to build your confidence at the end of the day, okay, to be able. So I want to not take a lot of your time, but if you have not yet subscribed to the session, to the management decision and control paper, especially if you're preparing for exams, you still have an opportunity to be able to do so, because once you're able to subscribe, we're able to give you the materials, we give you the videos, we give you the notes as well. And then from there, you start your study. And then we're going to have these routine classes, live classes based on the timetable. And these will be more guiding classes where we're now discussing on the topic that you have maybe studied, okay? So that is quite important. And I'm going to, my number, which you can be able to reach out to me, is, let me just try to, the number, I'm just going to leave that in the description, but just in case you have somewhere to write, it is +256, it is +256, 7 8 360 7360 2218. But it's also in the description of this video to help you reach out. You can send me a message, and then I'm able to help you accordingly, especially on how you can be able to join us for this study. I do believe that you will not really regret. We've had quite a number of students go through us, and they have really done well. So you too have potential to be able to really do well. So I look forward to having you